All right, let's take a look at what is moving the stocks broadly. I want to bring in Alex McGrath, Chief Investment Officer for North End Private Wealth. Alex, thanks for joining us. And as we start this month of June, what do our viewers need to know?
Well, we've got lots of things going on, right? So we had, our latest GDP report coming a little bit below where we thought it was going to come in. We've got inflation continuing to remain sticky here, perhaps even increasing a little bit. And I think that really is kind of throwing out, kind of a stagflation adjacent environment where, commodities such as oil, natural gas, gold, those types of things start to look a little bit more attractive here. We're certainly not off the growth train, but it's just like a kind of an interesting market scenario we've seen pop up here recently.
Is it a positive trend, Alex, for what the Fed wants to see?
We would say no. We got real lucky in 2023 with commodities broadly across the board really moving lower. That was making that CPI number and that PCE number perhaps look more attractive than it actually was. And now that those have kind of had a resurgence here in 24, we're really looking at core PCE and CPI being much more sticky than I think they would like for it to be. And that's why we really don't believe that, these heroic cuts are imminently in the pipeline right now.
Interesting. So where do you see market opportunity?
Certainly, we're still very, bullish on equities in general. We still think growth has, or the growth trade has some room to run. We still think semiconductors have room to run here because ultimately the macro data that we're looking at is not overly negative. Certainly growth is lower than we thought it was going to be, but that doesn't mean it doesn't exist. And so those factors that the Fed was looking for to kind of generate where they were going to get to with rate cuts have not come to this point. And that's not necessarily a bad thing because if the economy is still growing, equities are still a great place to be sitting.
So if you are bullish on the semiconductor space, what's your take on the latest chips that we saw from NVIDIA over the weekend and AMD earlier today?
I mean, I think that continues to be a boon to their growth. I mean, you kind of look at, the semiconductor industry as a whole, where that's really like the industrial of the future. That's what powers, AI, driverless car tech, all the data centers that we're running right now, all run off of these chips. And, it really comes down to production capacity to how big they can actually get to.
If NVIDIA gave us a real sense of the growth opportunity on the semiconductor side, did Salesforce give us a better picture of the perhaps downside when it comes to software?
Perhaps that may be a one-off scenario. It's interesting looking at that reaction that we had to Salesforce last week because Meta went through something similar to that a month ago and it rebounded back very quickly. So I don't want to put the nail in the coffin of them yet, but we'll have to see how that plays out.
Mm-hmm.
Interesting. So I do see volatility creeping a little bit higher, but certainly this growth trade, Alex, in the past few weeks has been hot. Not just the large cap technology names like the semiconductors, but the small caps as well that have really failed to see any growth relative to the broader market up until this point. What do you think is changing that is allowing some of these smaller companies to outperform now in the market?
So that for us, when we were looking kind of at what we wanted to see out of 2024 was really a broadening return of the other 493 companies in the S&P 500 and even that Russell 2000. The Russell got dinged a little bit for the last couple of years because those smaller companies are infinitely more sensitive to higher interest rates. And, certainly we're not in a position right now where those rates are going to be coming down, but we know they will come down. So, hopefully the earnings behind those companies continue to look good. And then when interest rates start to drop back, that's going to be a great place to be sitting.
Speaking of smaller companies, I know you don't spend a ton of your time analyzing GameStop, but it certainly grabs a lot of headlines. And man, the stock's up almost 50% today. It's more than doubled year to date. If a client comes in and says, Alex, I want to go big on GameStop, what are you telling them?
I would do my level best to talk them out of it because, far be it for me to argue with somebody like who's got a stock that's moving on memes on Twitter, but I just feel like there is a lot more hurt in that than there is upside.
So you're not recommending GameStop. I think that's a fair point. But what about a Reddit? Because we could take a look at other meme stocks today and likely AMC, they would be higher on this news. But Reddit is a stock that did go public a few months ago, and even with this new iteration that allowed insiders to sell early outside of a lockup window, is Reddit a growth stock that you might like, Alex?
I don't like that personally. It's just not really in my wheelhouse. I don't really know what you're getting out of that other than, a message board community that seems to be very, very active. And I'm sure there's all kinds of data you could mine and sell from that, but it's just not something that really fits in our wheelhouse.
So the Fed,
Go ahead.
I was just going to ask about the Fed, which does meet next week. And in terms of what we might hear from the Fed chair that could impact the direction of stocks, what are you expecting? What do you think the Fed needs to convey in this meeting?
We believe we're going to get exactly out of the Fed at that next meeting, precisely what we've gotten for the last 8 months. Inflation's not where we want it to be. We're not afraid to go higher if we need to. We're not afraid to go lower if we need to. And I think we believe it's going to have more of a, hawkish bent to it than it would a dovish bent to it. But that situation is going to continue to materialize as this macro data continues to come in. And if it comes in weaker, we're going to get something different. If it continues to come in strong, I think we're going to get more of the same of what we've seen for the last 8 months.
Yeah, higher for longer looking likely. Alex, the one thing I am curious about the Fed chair, his read of the consumer. What are you seeing that gives you a good sense of how the consumer is doing in this economy and what's to come?
I think you could look at several retailers that have reported here recently and give you a little bit of the heebie-jeebies on the consumer. We look at it from a, total overall standpoint and say, look, interest rates are the highest they've been in 2 decades. The consumer is fairly leveraged with credit card debt. Mortgages are infinitely more expensive than they were 3 years ago. Like, how does that continue to play out? Because the consumer and consumer spending is 70% of GDP. And so if that number starts to move in a negative direction, that's going to cause some headwinds down the road. So I know that's something we're super plugged into, is watching kind of what those consumer trends are and where this is going to play out. Currently, it still looks really good, but the problem in looking at the numbers that we've seen over the last year is consumer spending is measured linearly. So that's not necessarily factoring in the 30% inflation we've seen across the board. So, with that inflation, of course, consumer spending has been stronger than we thought it was going to be because everything costs 30% more, but it comes back to like, how long can that keep up? And that's something we're very, very plugged into as it relates to like, where are we on asset allocation and what kind of moves are we making in the underlying portfolios?
Quickly, Alex, the decision by OPEC to cut output further. Oil prices little changed in the wake of that, but it is as we head into the busy summer travel season. What is your expectation for prices at the pump?
That's a tough decision for them to make running into the summer months, and that would all but tell you that those prices at the pump are going to remain unchanged or perhaps a little bit higher, which is again a drag on PCE and consumer spending. So we'll see what comes of that, but that's not great news for filling up your car.
Alex McGrath, Chief Investment Officer for North End Private Wealth. Alex, thanks for joining us.